What are 5 high-quality stocks and ETFs that offer not only massive dividends but in a safe manner? Stay tuned to find out. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. The first ETF that offers a massive dividend in a very safe manner and has had some massive growth over the last year plus is none other than JEPQ, or the JPMorgan Nasdaq Equity Premium Income ETF. Now, if you're a dividend income focused investor, I would almost bet on that you've heard of JEPB and JEPQ at this point, but if you haven't, JEPQ is a must add to your watch list. Now, JEPQ is not only just up around 20% over the last 1 year time frame, but I promise you we're talking about stocks and ETFs to offer massive dividends, and JEPQ's dividend yield is around 9%. So with this ETF, you are getting exposure to something very unique. You're getting exposure to growth potential because of the holdings within JEPQ. The Nasdaq holdings have a lot of growth potential, but also because this ETF utilizes a cover call overlay. As long as there's some volatility in the market, you are almost guaranteed a nice juicy dividend every single month. But when it comes to JEPQ, speaking of volatility, if there is a monthly time frame where volatility might be a little bit lower, as you can see right here, the dividend payouts might be a little bit smaller. Now, this is because JEPQ, utilizing that cover call overlay, selling options, when option prices are lower, the distributions that JEPQ offers most likely will follow. But regardless of the distribution size, JEPQ's paid around $4.82 per share over the last 12 months, pays a dividend on a monthly basis, and like I said, when volatility enters the market, these dividends most likely will get very, very juicy. JEPQ is in my portfolio. I own over 1,000 shares. It's one of my favorite for those that are looking for income, but also growth. The next ETF offers a ton of income for investors, is also safe in my opinion, and offers some growth potential. We're talking about SPYI, or the NEOS S&P 500 High Income ETF. Now, SPYI is a newer ETF that basically buys into the S&P 500, utilizes a cover call strategy, but also on top of that does it in a tax efficient manner. Plus, SPYI also sometimes buys SPY options, which means unlike most cover call ETFs, this ETF also could have some upside potential along with paying you a massive dividend every single month. Now, SPYI's dividend payouts are pretty steady, as you can see right here, somewhere around 47, 48, all up to 50 cents on a monthly basis, which is massive. We're talking $5.86 over the last year of dividends paid, which is well over 10%. Now, SPYI might not be the perfect investment for every single investor out there, but like I said, if you're an investor that's seeking exposure to income, but not only that, also want it in a relatively tax efficient manner, SPYI is a must on your watch list. And SPYI has been my daily buy for a while now, and I definitely plan to reach hundreds of shares of SPYI over the next year or so. The next ETF that offers a massive dividend yield, the biggest in this entire video, is going to be SVOL, or the Simplified Volatility Premium ETF. Now, SVOL has a very unique strategy. It basically shorts the volatility index, and although it is sort of complicated, I've made multiple videos going over SVOL on this channel, so definitely take a look. Now, SVOL, because of its strategy, offers around a 16% plus dividend yield. And although this ETF, out of everything we're going to go through in this video, at least in my opinion, is more or less on the riskier side of things, this ETF has paid a very consistent dividend over the past year plus. And surprisingly enough, even for an ETF that has this unique strategy and offers a well over 16% dividend yield, on the 1 year time frame, as you can see, SVOL is in the green. Now, if we zoom out all the way, yes, SVOL has decayed a little bit. It's down 12.66%. And on top of that, this ETF has a massive expense ratio at 1.16%. And by no means would I ever buy SVOL and make it a large portion of my portfolio. But for those more income-focused investors out there looking for some alternative strategies to sort of diversify their portfolio strategy, SVOL is definitely one to look into, and I'll definitely keep adding more to SVOL over time. Now for a few higher yielding stocks that I absolutely love, that I hold a lot of. First off, Enterprise Product Partners. This is EPD. Some of the initial negatives, EPD is going to issue a K1 because it is a limited partnership, so tax time might get a little bit confusing, although I've owned EPD for several years now and haven't had all that many troubles. Now, EPD is in the midstream oil and gas transportation sector. So like I always say, if you're underexposed to that and you need some exposure, EPD is definitely one to look into. In my opinion, one of the best in this entire area. Now, EPD offers a safe dividend, relatively speaking, is a massive company, offers a starting dividend yield of around 7%, and this is even after EPD's price has went up a lot over the last year. As far as dividend growth goes, although it's not the fastest dividend growth across the entire market, as you can see over the past year, over the past 20 years, EPD has raised their dividend around 3 to 5%, which isn't all that bad, especially when you're getting exposure to a starting yield of 7+%. Now, as far as EPD sentiment, it feels like a lot of dividend growth investors either love this one or are not that fond of it, and a lot of times it's because that K1 taxation. But honestly, if you do want some exposure to this area in the market, I definitely think Enterprise Product Partners is worth looking into. Now, the last safe, high-yielding stock that we're going to go through in this video. And side note, if you like videos like this, make sure to subscribe. But we're talking about ticker symbol MAN or Main Street Capital. So first off, just to go over some of the basics, Main Street Capital is a Houston-based business development company. And it says right here on their website, Main Street Capital has helped over 200 private companies grow or transition by providing flexible private equity and debt capital solutions. Privately held businesses turn to us because we are Main Street, not Wall Street. We build relationships and tailor transactions to meet the unique needs of our portfolio companies and their owners. They then go on to explain that they are pretty much a middle-of-the-road, one-stop shop capital solution for companies looking for capital, entrepreneurs looking for capital, etc. And right here on Main Street Capital, what's pretty neat is that you can actually see every single company within their portfolio, and they have exposure to quite a few companies as of right now. I've owned it in my portfolio for several years now. Now, Main Street Capital's dividend is a 62 out of 100 on the safety score. Main offers over a 6% starting yield, is also up significantly in price over the past few years. So I was lucky enough to buy a lot of Main back when it was offering above a 7% yield. But even to this day, I'm still adding some shares of Main every now and then. Now, one of my favorite things about investing into a business development company, and specifically Main Street Capital, is there are special payouts, special dividends that are offered from time and time again. Now, as you can see in 2023 and 2024, there were definitely significant payouts to shareholders, which really bumped up the overall dividend payout that Main Street Capital offered, which is again one of the reasons on why I'm very bullish on this single stock and why I continue to buy into it. Now, because of Main Street Capital's business model, I never probably would make Main Street Capital a large portion of my overall portfolio, although like I said, I have owned several hundreds of shares of Main across my portfolios. So if you're an investor out there looking for a single stock that offers a starting yield above 6%, offers a safe dividend, and like I said, if you want some exposure into this area of the market, Main Street Capital most likely is already in your portfolio, and if it's not, definitely add it to your watch list. So there we have it. Those are 5 different stocks and ETFs that all offer a relatively high starting dividend yield, but a relatively safe dividend at that. Now, every single one of the holdings that we went through in today's video are all in my long-term portfolio. And although some of the positions that we went through are smaller portions or larger portions, I'm a big fan of every single one of them. Which brings me to my final question. If you guys were to have to choose just one of the holdings we went through in today's video to buy and hold forever, which one would it be and why? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.